Hey everyone, welcome back to Corporate Decoder. PFG Incorporated just filed an 8K reporting a material event, and I'm seeing one figure that really caught my eye. Quick note, this is not financial advice, just my take on public filings for educational purposes. Today, the company is reporting its assets under management, and while the overall number is huge, how it got there is the real story. Alright, so this is a current report, basically an update that a company puts out when something important happens between their regular quarterly reports. This one from PFG Incorporated is about their assets under management, or AUM, as of the 31st of March 2026. Think of AUM as the total value of all the money a company manages for its clients through investment funds and other financial products. It is a key metric for asset managers like PFG, showing how much business they are doing. PFG Incorporated, or Principal Financial Group as they are more commonly known, is a big player in the financial services world, managing money for people and businesses. They are listed on the Nasdaq Global Select Market under the ticker symbol PFG. The reason for this filing is that PFG is giving a heads up on their assets under management before they release their full quarterly earnings. This is done to keep everyone informed equally, which is what Regulation FD, or fair disclosure, is all about. It prevents companies from selectively sharing important information with just a few people. Here is the big number as of the end of March 2026. PFG was managing a staggering $770.2 billion. That is a lot of zeros. To break that down, the majority, $578 billion, comes from their investment management division. Then another $159.6 billion is managed by their international pension business. So they have strong footing in both general investments and specific pension management, especially internationally. Now this next part is really where the nuance comes in. While the total assets under management look impressive, the report mentions that for the first quarter of 2026, there was a negative impact of about 1.2% on their assets. This wasn't due to poor cash flow on their part, but rather things like market performance, meaning if the stock market or bond market goes down, the value of the assets they manage also goes down. Foreign currency translation is another factor, especially for an international business. If the dollar strengthens against other currencies, the value of assets held in those currencies decreases when translated back to dollars. A 1.2% dip might not sound like much on paper, but when you're dealing with hundreds of billions of dollars, even small percentages represent significant amounts of money. Let's put that into perspective. If we take that 1.2% hit on the $770.2 billion, it is a drop of roughly $9.2 billion. That is a substantial amount being wiped out due to external market forces. The company is being transparent about the risks they face, especially in volatile markets. They highlight their exposure to small and mid-cap stocks, international equities, high-yield bonds, and emerging markets. These are generally considered higher risk investments. When markets are stable, they can offer higher returns. But when things get choppy, or as they put it, market dislocations, these investments can be hit harder. This means that PFG's overall AUM can be quite sensitive to global economic shifts and investor sentiment in these specific market segments. Think about it like this. If you have a lot of your money in a few high-risk stocks, any negative news about those specific companies or the industry they're in can cause a big drop in your portfolio. PFG is essentially saying a similar thing is happening with the larger pool of money they manage. For context, PFG has a market capitalization of around $20.9 billion and employs nearly 20,000 people, indicating it is a substantial financial institution. Recent news also shows that while some earnings reports have missed estimates, the stock has been outperforming competitors on certain days. Looking at the overall picture, PFG manages a massive amount of money, which is a testament to their long-standing presence and client trust. However, the recent filing points out the inherent volatility associated with managing such a large and diverse portfolio, especially when market conditions are unpredictable. The 1.2% negative impact, while seemingly small, represents a significant real dollar amount affected by market fluctuations and currency movements. This highlights the importance of diversification not just for their clients, but also for the stability of the firm's reported assets under management. What I am actually looking for is how PFG manages these exposures during turbulent times. Their ability to navigate these market dislocations and protect client assets will be crucial for their continued growth and reputation. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.